Welcome back to Brashonomics. I'm Ben Brashen, and man, I mean, there is a lot to understand when it comes to trying to get a job. And as complex as that seems, just about everybody at some point in time will have a job, or I think sometimes people have 7, 8, or 9, or maybe 20 in their lifetime. But when it comes to buying a house, whether it is an investment or for a home purchase, there's a lot going on too. And not every single person buys a house or investment properties. Jimmy Dainard joins us, one of the founding partners of Heaton Dainard Real Estate and Interest Funding, who's a licensed real estate broker and has been buying and selling real estate in King, Snohomish, and Pierce County for the past 7 years. Well, hey, Jimmy, how are you?
I'm good, Ben. How you doing?
Good. Good to see you.
Yeah, good to see you.
So, a lot of people think as the market goes up, they start thinking, the real estate market goes up, I want to become a real estate investor. And there is some different ways, I guess, you can do that, whether it's short-term or long-term. What are you seeing people turning towards right now?
They're turning a lot more towards what we talked about on the last discussion, where people want to buy and resell houses. And we talked about that in our last topic, that's the most popular thing. People want to get rich quick, and that's, what everyone wants to get into. So I thought this week we'd talk a little bit more about,
Get rich slow.
Get rich slow. Slow and steady wins the race. And, about diversifying your investments and actually being a smart real estate investor in, buying for the short term, but also for the long term, and really building long-term wealth.
So how do you, what does the current market present as far as investing for long-term in real estate?
Well, right now we have a very unique market. Like, we have not seen this in, I don't think, ever in the real estate market, where interest rates are extremely, extremely low, and the pricing has still remained extremely low. So it's the perfect storm right now to where you can purchase a property for substantially under value, and also for pricing that we haven't seen since the late 80s, early 90s, and get in with extremely low rates to where the money's almost free. And right now, if you take advantage of those rates, I think in a couple years, you're going to look back and say, when rates skyrocket up to 6-7%.
Skyrocket
Up
to 6.
Up to 6, which, is an extremely good rate. But right
Sure.
now, if you can get a non-owner occupied loan for, what's
3.5%,
3.5%,
under 4.
That is unheard of. So you can buy these properties for $100,000, $150,000 that are bringing in anywhere between $1,300 and $1,500 a month in income. You can build a substantial real estate portfolio and also produce quite a bit of income over the next 10, 20 years.
What specifically does Seattle or the greater Puget Sound area offer differently than maybe other places in the country?
Well, right now there's a lot of different companies out there that you can go buy cash flow properties in Las Vegas and Arizona and Memphis, and they offer kind of a different product to where you can buy these houses for $50,000. You put in 50 or 35 and you can cash flow X amount of dollars on it. But the reason people really look at Seattle's market is you can buy properties substantially under market, the cash flow with the same type of returns, but also you can get a substantial equity position in them. Right now, one of our clients, they just closed on a property 2 weeks ago. Actually, Ben's doing the refi on it, and the client paid $125,000 for a duplex in Kent. Okay, this is right outside the train stations with, it's a high income producing area. It's got, right outside, tons of local market. And he picked it up for $125,000 using our bank track real estate investment purchasing system. It's going to appraise out as is for around $175,000, $185,000, and it's going to bring in over $1,800 a month in income once it's rented out. He's going to cash flow over $800 a month with having very little money into the property. So, right now, you just can't find that in any kind of market to where you can pick up 40, 50 grand in equity and also pick up $1,000 a month in income, every month.
Sure. Is that an anomaly? Is that standard?
That is, we can find those kind of returns. We usually get about 5 to 8 of those a month. That's a little bit on the high side, to be honest, but it's very common for us to be able to find single family houses, duplexes for all under $150,000, which is, it's relatively low risk. Because even with this market and how kind of versatile it is right now it's in very good conditions. The market's been going up. It's very competitive out there. Inventory's light. But even if the market goes down, he's still going to be making $1,000 a month, and he's still going to have some sort of equity in the property. So it's a much different purchasing system than what we used to use back in '06, where it was more banking on appreciation and long-term potential.
Well, and the interesting point about that is even if the real estate market were to go down, that's typically going to mean more people start going into rentals, similar to what we saw over the last few years.
Yeah, but exactly. And the national or Seattle's average market rents has gone up 13.3% since 2011. And that's because there's so many houses that have been foreclosed on that the rental market, people with income and jobs that were over leveraged in their loans, they need places to live. And so what's happening is as more and more people start to lose their homes, they have to get into rentals and get into credit repair and kind of get back on their feet. It's causing less inventory on the rental side as well. I just put a condo up with my own condo in Montlake, and I put it up, and in one day, I raised the rent from my original rent 15%, and in one day I had 19 people that wanted to rent the place. They said, "I'll take it. I don't even need to walk through." And I was starting to get offers above my rental rate. It was like it was getting bid up for what I put it up for. So now I'm renting it for like 18% more than I had it for 12 months ago.
Wow.
And I'm charging them for some other fees that wasn't charging before.
So when you start looking at the cash flow piece, that's obviously huge. You can gain equity. What about the long-term property valuation? I mean, a lot of people, we talked about this as maybe a get-rich-slow type of, strategy. What's the long-term property valuation that you guys go through?
Yeah. So as an investor, things that you want to look at when you're looking to purchase rentals is how far away do you want them to be? Like, what's the location on them? If you live in Bellevue, do you want your rentals within a 5-mile radius or 10-mile radius in case you want to go drive and look at them? Or do you not care and you want to look at just the location overall? Is it in the outskirts? Is it close to bus routes? Is it, downtown Seattle, or is it in Bonnie Lake where, commuters have to go an hour and a half to get to work? Those are things you want to look at, just kind of the path of progress and where they're located and where people want to go and what their accessibility is for jobs. If there's more jobs around your rental, the easier it's going to be to lease.
You bring out a good point, too, where you have a lot of families who maybe were foreclosed on. Maybe they did a short sale strategically. And now, they're good people. They have good credit other than maybe that property. They have good jobs. And they're looking for houses that are maybe within that school district as well. So I would think that good school districts is really a key.
Yeah, good school districts. And, also people just don't want to move. If they're in Lake Washington School District, which is a very good school district, they're not going to, that's the only rental place they're going to look in. They're not going to want to switch off that. Those are all big, items for people.
What about then the benefits right now of purchasing rental property in this market?
So in this market right now, as the market's actually starting to go up and pricing starting to go up, right now you can pick up things, 20-30% below market pricing. So you're going to get appreciation in there. You're also going to be able to depreciate on your taxes. As you're buying and you're flipping these houses and you're making money, you need other tax write-offs in there to kind of subsidize down your income. Also, you can avoid your short-term capital gains, which right now it's at 35%, which it could go up to 42% after the election. So you can avoid your short-term capital gains if you keep the rental for 2 years, get some write-offs, get some cash flow in there, and then also you can kind of hedge against inflation. So if inflation starts going out of control, you have a tangible asset that income's going to go up with that inflation.
Jimmy, always good to see you. And it seems to me that a lot of this comes down to it's money versus a house. You're not buying a house. You're buying something that will give you money or raise your wealth. And that's kind of an interesting balance because, you really need to focus on what's going to appreciate, as you said, what's going to give you the highest rents. And it's a financial return, not maybe the kitchen you fell in love with.
Exactly. You're investing in a tangible asset, and it's something that you can retire on in 30, 40 years. You can go buy and sell a house, make 15, 20 grand real quick, and then that money gets spent or half of it goes to the taxes. But it's something that you can invest in long term and also take advantage of these extremely low rates because, you're also investing in just cheap money. At the same time, you're investing in a tangible asset that's going to go up, but you're getting rates that you will not be able to get in the next 10 years.
That is true. Jimmy, thanks so much for joining us. Again, James Dainard, founder of Heaton Dainard and Intrust Funding. When we come back, good friends of ours in the show, Andy Cruz and Andrew Vest are going to join us to talk about some ways that they are getting the word out for different companies. We'll be right back after this break.